I'll call this hearing to order. Good morning to everybody. This is a day that will live in infamy because I am chairman of the banking committee, but only temporarily, okay, only temporarily. Today's hearing is a hybrid format. Our witnesses are in person, but members have the option to appear both in person or virtually. The committee meets today to consider the nominations of three important presidential nominees. First, the Honorable Michael Barr to be a member and vice chairman for the supervision of the Board of Governors of the Federal Reserve. Then next is Mr. Jaime Lizárraga to be the member of the Securities and Exchange Commission. And finally, Mark Uyeda to be a member of the Securities and Exchange Commission. We thank the nominees for appearing here today. Welcome their families and their friends who are in the audience, as well as those who are watching at home. I also want to thank a warm welcome to Speaker Pelosi, who is going to be here, if not already here, to introduce Mr. Lizárraga and Senator Stabenow and Senator Peters. Our great Michigan senators will introduce Mr. Barr. And my friend Senator Toomey will introduce Mr. Uyeda. To our nominees, I want to thank you for your willingness to serve in these important roles. We are here today to consider three nominees who, if confirmed, will have lasting impact on our economy. We know who powers our economy. It's small businesses, folks on Main Street who create jobs and prosperity for communities and its workers. It's our job as members of this esteemed body to support an economy that actually rewards their work. The nominees before the committee today will play important roles in our efforts to support workers, small businesses, and American families. Mr. Michael Barr is the President's nominee to be Vice Chair for Supervision. Mr. Barr is well-respected, expert on financial regulation, who currently serves as the Dean for Public Policy and a Professor of Law at the University of Michigan. From 2009 to 2010, Mr. Barr served as Assistant Secretary for Financial Institutions at the Department of Treasury, where he played a key role in helping the Obama administration work with Congress to craft and enact the Dodd-Frank Act. Mr. Barr previously served at the White House and earlier in his career in the Treasury and State Departments under President Clinton. Mr. Barr, I want to thank you for your willingness to serve our country once again. Mr. Lizárraga and Mr. Uyeda have been nominated by the President to be commissioners of the Securities and Exchange Commission. If confirmed, they will join the SEC at a critical time. Mr. Lizárraga has worked on financial services policy in Congress and played a key role in some of the most impactful pieces of capital market legislation passed by Congress to support working families and our country's middle class. The son of Mexican immigrants, he understands the important role the SEC plays in protecting consumers. He currently serves as a senior advisor to Speaker Pelosi, who is here today to support his nomination. Prior to joining the Speaker's office, Mr. Lizárraga served in senior level positions on the House Financial Services Committee. Mr. Lizárraga also served at the Treasury Department as well as the SEC, where he worked as the Deputy Director of Legislative Affairs. Mr. Lizárraga, we want to thank you for your willingness to serve our country. Mr. Uyeda has served at the SEC since 2006 and is currently working on Ranking Member Toomey's staff, helping our committee navigate some of the greatest financial challenges in recent American history. At the SEC, Mr. Uyeda has served as counsel for Commissioners Paul Atkins and Michael P. Warwer. He also served as a senior advisor to my good friend, Jay Clayton. Earlier in his career, Mr. Uyeda worked in private law practice as well as for the California Department of Corporations. Thank you, Mr. Uyeda, for your willingness to continue to serve. Look, folks, these positions are really, really important. If confirmed, you all will be on the front lines at a critical point in our nation's history. We are facing challenges that are unique, they are unprecedented, and we need folks serving our country who will always put the needs of our country before any personal or political ideology. Hopefully the worst of this pandemic is behind us, but our economy is not where it needs to be in terms of its recovery. Families are seeing higher costs from the gas pump to the grocery store. And while unemployment is at an all-time low, small businesses in Montana and across the country have troubles finding and keeping workers. This committee, under the leadership of Chairman Brown and Ranking Member Toomey, have confirmed a host of folks to critical positions charged with guiding the economy back from the brink. If confirmed, the three of you that are here today will immediately join in that work. But before these folks can do their jobs, we have to do ours. Our institutions have to be fully staffed if we're going to be able to do their jobs and meet the challenges of our country. We have a lot more work to do here to support workers, to support small businesses, to lower costs for working families, to increase transparency in the marketplace, and to hold bad actors accountable. So let's get to it. Ranking Member Toomey, you are now recognized for your opening statement.
Thank you, Mr. Chairman. We're here to consider three nominations: Michael Barr to be the Fed Vice Chair for Supervision, Mark Uyeda, and Jaime Lizárraga to be SEC Commissioners. These nominations remind us of the importance of financial regulators abiding by their respective statutory mandates. This principle really should be nonpartisan. A fundamental aspect of a properly functioning democratic society is that important public policy decisions should be made by elected, accountable representatives. Otherwise, what's the point of the elections? Unfortunately, I'm deeply concerned that financial regulators, including the Fed and the SEC, are increasingly straying into contentious political issues wholly unrelated to their mandates and expertise. These include issues like what to do about global warming, social justice, even education policy. Now, no doubt these are important issues, but they're wholly unrelated to the limited statutory mandates and expertise of financial regulators. The Fed, for instance, has been weighing in on every one of those contentious issues. Some intend to use the Fed's expected climate scenario analysis to steer capital away from carbon-intensive industries. All 12 of the reserve banks have sponsored a Racism in the Economy series where invited speakers advocated for particularly politically controversial ideas, including race-based reparations and defunding the police. And the Minneapolis Fed has been actively lobbying to change Minnesota's constitution on the issue of K-12 education. Does anyone really think these activities are within the Fed's statutory mandates? Of course not. In February, we held a hearing to consider Sarah Raskin's nomination to be the Fed Vice Chair for Supervision. At that hearing, I cautioned that the hearing was not just about vetting Ms. Raskin. I noted that it was a referendum on the independence of the Fed in the face of pressure from some on the left who wanted to use the central bank to allocate capital to address global warming. Addressing contentious issues like global warming require political decisions that involve trade-offs. Trade-offs like how expensive should credit be for oil drillers in order to make gas more scarce and costlier for motorists. And if we limit domestic oil and gas production, causing energy prices to rise and consumers to pay more, how much more is appropriate? In a democratic society, those trade-offs must be made by elected representatives who are accountable to the American people, not unelected central bankers. Ms. Raskin's prior advocacy that unelected financial regulators should use their powers to address global warming led to the Senate's bipartisan rejection of her nomination. That rejection sends a powerful message to Fed nominees, including Professor Barr, and that is that all Fed governors must commit to not exceed the Fed's limited statutory mandates, and by doing so, help to ensure the continuing independence of the Fed. The need for a Fed that's focused on its mandates is especially critical with inflation at a 40-year high. Even though wages are rising, prices are rising much faster, and that's causing workers, especially lower-income workers, to fall further and further behind. I hope that Professor Barr will acknowledge today that inflation is severe and commit to doing whatever it takes to bring inflation back down. Professor Barr certainly has an impressive background and relevant experience to serve as the Fed Vice Chair of Supervision. However, some of his previous work raises some concerns and questions about his views on financial regulation. Professor Barr strongly opposed the bipartisan S-2155 bill that Senators Tester and Warner helped to craft, which really enacted modest and sensible reforms to Dodd-Frank. He also argued that climate change presents severe long-term risks to the economy and financial stability that must be urgently addressed today. As I've discussed, there is no systemic risk to the banking system posed by the gradual changes in the Earth's average temperature. I'll be interested in hearing Professor Barr describe the actions he believes the Fed should take to address these supposed risks. Keeping financial regulators apolitical and independent is as important now as it has ever been. To my Democratic colleagues who favor using financial regulators to address contentious political issues, I ask, how would you feel about a future Republican administration under the pretense of financial stability risk, using the Fed to allocate capital toward maybe increased defense spending or financing a border wall or offshore oil development? Once the precedent is set, the potential for further abuse by both political parties is limitless. Now, in addition to Professor Barr, today we'll also hear from two nominees for the SEC. Mr. Lizárraga has worked on financial services issues on Capitol Hill for many, many years. I commend him for his longstanding commitment to public service. And in a few moments, I will introduce Mr. Uyeda, who is exceptionally well qualified to serve as an SEC commissioner. I look forward to hearing from all three of our nominees.
Thank you, Senator Toomey. We will now have the introductions of today's nominees. First, Speaker Pelosi, it is an honor to have you in front of the Senate Banking Committee, and you may introduce Mr. Lizárraga here today.
Good morning, Mr. Chairman. Good morning, members. I have great respect for the work of this committee, having served on the Banking Committee for long, when it was called the Banking Committee, before it became Financial Services, in the House, Banking, Housing, and Urban Affairs. Take great pride in the fact that Mr. Toomey and Sherrod Brown both came from the House of Representatives and now serve on this great committee. And thank you, Mr. Tester, Senator Tester, for your leadership. I congratulate you and Mr. Moran, Senator Moran, for your announcement the other day for our veterans. The bipartisan nature of it is pretty exhilarating. Today I'm here, as has been mentioned, with great again, official respect for the work of this committee, and I'm here to, it's my privilege to introduce a devoted champion of working families, a respected expert on financial services, and a lifelong public servant, Jaime Lizárraga. He has served in my office, the office of the House Speaker and leader, for nearly 15 years, and for a long time as the highest senior advisor. Every single day, his brilliant strategic mind, wide-ranging expertise, and unending compassion have been central to much of the work of the Congress. And if confirmed as a commissioner, he will be an invaluable asset to the Securities and Exchange Commission and its independent work. One of the most important roles of the SEC is to secure that the policies we enact in Congress protect consumers in their everyday lives. Jaime is uniquely positioned to succeed in this task, understanding how to transform legislation into implementation, as was mentioned by Senator Tester, having served on the House Financial Services Committee, the Treasury Department, and as a staffer at the SEC. As Speaker, it's been my privilege to witness firsthand his masterful leadership. Because of his immense talent and vast knowledge, his portfolio has grown more expansive in the Speaker's office as he played an integral role in crafting and enacting some of the most consequential economic legislation in a generation. There's many things to say about him, but one of them was the Troubled Asset Relief Program that we worked in a bipartisan way with the Bush administration on, the Dodd-Frank reforms, the Financial Crisis Inquiry Commission, restructuring Puerto Rico's debt and reforming our immigration system, among other things, and multiple relief packages that we worked in large measure in a bipartisan way to advance. And so with that, I again just say that Jaime is known and adored by all as a family man. He comes here today strengthened and inspired by the love of his family, the son of immigrants from Mexico, as you mentioned, Ms. Senator Tester. He's never forgotten his parents' hard work and sacrifices to give him and his sister a brighter future. His story is the story of the American dream. His parents, Esther and Enrique, and his sister, Maria Esther, are beaming with pride as they watch this hearing from home in California. And today, Jaime is joined this morning by his loving wife of 22 years, Kelly, his darling children, Victoria, Diego, Elena, Samuel, and Alexandra, and his dear mother-in-law, Paula. While he would be deeply missed by members of Congress, this is a bittersweet moment for me, and be missed by our colleagues who depend on him. If confirmed, Jaime would be a powerful voice for families like his own at the SEC. Thank you again for the opportunity to appear before you and to introduce the nominee for SEC Commissioner, Jaime Lizárraga. I do so with great pride and confidence that he will do a great job, and I thank you for your leadership, all of you, and for this opportunity to be here today. Thank you, Mr. Chairman.
Madam Speaker, we're honored with your presence, and we thank you for that introduction, and please know you're certainly welcome to stay for the entire hearing if you're not too busy.
Except we have the Prime Minister of Sweden and the President of Norway here to talk about their entry into NATO. Only that would take me away from this important.
We will give you that excuse then. Thank you, Madam
Thank
Speaker.
you.
Next up, we have two senators from another great M state, the great state of Michigan, to introduce Mr. Barr. Senator Stabenow.
Well, good morning. And Mr. Chairman, I'm thinking the last time we were together in a committee room, I was chairing the Agriculture Committee and you were testifying about really important legislation. So it's great to be back with you and Ranking Member Toomey and the entire committee. Appreciate the opportunity to be here also with my partner from Michigan in the Senate, Senator Peters. And I'm really honored today to introduce Michael Barr, a fellow Michigander whom President Biden nominated to serve as vice chair for the supervision of the Federal Reserve. And I've known Michael for many years. He's exactly the person we need at the Federal Reserve as our nation recovers from the pandemic and rebuilds for the future. Professor Barr has stellar credentials. He's currently Dean of the Gerald R. Ford School of Public Policy at the University of Michigan. You'd think that would keep him busy enough, but he's also a Frank Murphy Collegiate Professor of Public Policy, Roy F. and Jean Murphy Profit Professor of Law at the University of Michigan Law School, and the founder and faculty director of the University of Michigan Center on Finance, Law, and Policy. He has also taught financial regulation and international finance. He co-founded the International Transactions Clinic and co-founded the Detroit Neighborhood Entrepreneurs Project, which is a wonderful program that's helped launch more than 115 small businesses in Michigan, and primarily owned by women. And so it's exciting to see what's happening. Giving small businesses and families the tools they need to succeed really is nothing new for Michael Barr. His entire career has been focused on protecting consumers and building an economy that helps our entire nation thrive. And he's no stranger to the Senate, having previously been confirmed on a bipartisan basis during the Obama administration, and we so appreciated his service at that time. He played an important role in creating the Consumer Financial Protection Bureau and was a key architect of Dodd-Frank. Professor Barr deeply understands how the 2008 financial crisis hurt workers and families and businesses and communities, particularly in Michigan. I'm confident that in this role, he will work day and night to ensure that it never happens again. It's my honor to introduce Professor Barr, and I urge the members of the committee to vote yes on this important nomination. Thank you.
Thank you, Senator Stabenow. We appreciate the introduction. We appreciate your leadership. Thanks for being in front of the Banking Committee. Senator Peters.
Well, thank you, Chairman Tester, Ranking Member Toomey. It's wonderful to be here before your committee, and I join my colleague, Senator Stabenow, in introducing Professor Michael Barr to the committee, and I think it shows how qualified he is, how we know him as an individual, and the strong support that we have for him in this nomination. There's no question Federal Reserve governors are meant to lead an important agency with a long tradition of nonpartisan decision-making based on simply what's best for the economy. It's imperative that any nominee to join the Federal Reserve is able to make sound decisions based on evidence without partisan bias and the best interest of the American people. Thankfully, Michigan's own Michael Barr has the experience and the leadership needed to help strengthen our economy, support our families across our state and our country, and it is without reservation that I'm proud to recommend him as President Biden's nominee to serve as Vice Chair of Supervision at the Federal Reserve. I'm confident that Professor Barr has the professional qualifications, the independence, and the knowledge to protect the stability of our economy to make him worthy of the Senate's favorable consideration. As Senator Stabenow mentioned, Professor Barr has a rich history of professional service, serving in both the Clinton and Obama administrations in a variety of different roles. One that I've worked with him in particular with personally was in 2009 when President Obama was trying to navigate out of a great recession. He had nominated Professor Barr to serve as the Department of Treasury's Assistant Secretary for Financial Institutions. He was unanimously confirmed by this body to serve in that position. And as Assistant Secretary for Financial Institutions, Professor Barr was responsible for developing and coordinating Treasury policies on legislative and regulatory affairs affecting financial institutions. Most notably, he was the key architect of the Dodd-Frank Wall Street Reform and Consumer Protection Act of 2010, which I was very proud to work with him. I was a member of that conference committee as a freshman in the House. And I can tell you that Professor Barr played a central role in developing the Consumer Financial Protection Bureau and policies to expand access, particularly for small businesses across the country. In 2017, as a fitting recognition of his extensive experience in developing, enacting, and implementing public policies, Michael Barr was approved as the Dean of the University of Michigan's Gerald R. Ford School of Public Policy. And in this role, Professor Barr has committed to helping the Ford School become even more inclusive, even more collaborative with colleagues all across the university, and even more engaged in making a policy impact at both the local, the state, and national, and even global levels. The school is certainly very lucky to have him serving as dean. Throughout his career, Professor Barr has been an exemplary public servant, a molder of young minds, and has worked hard to serve the people of Michigan and across the state. So, in conclusion, I'm proud to recognize Professor Barr today for his many, many professional achievements and for the expertise that I know he will bring to the Federal Reserve. Thank you again for this opportunity to recognize an outstanding nominee.
Senator Peters, thank you for that introduction. Thank you for your hard work. We appreciate the Michigan delegation being here today in front of the Banking Committee. Thank you both.
Thank you.
Finally, Ranking Member Toomey will introduce Mr. Uyeda.
Thank you, Mr. Chairman. It is my privilege to introduce Mark Uyeda today. In nominating Mr. Uyeda, President Biden has chosen someone who's exceptionally well qualified to serve as an SEC commissioner. Mark is a dedicated public servant and an extremely talented securities lawyer. He has over 25 years of experience in securities and corporate law. That includes experience of regularly preparing prospectuses and 10-Ks for public companies filed with the SEC, which I am told is something that no other current SEC commissioner has done. For nearly 2 decades, Mark Uyeda has worked as a state and federal securities regulator, including the last 15 years as a career attorney with the SEC. During his career, Mark has been recognized with multiple SEC awards for his work, including the SEC Chairman's Award for Excellence and the SEC Capital Markets Award. Having personally worked with Mark during his time as an SEC attorney detailed to the Banking Committee, I know firsthand that the depth of his knowledge on securities and markets is unrivaled. Beyond his impressive credentials and expertise, Mark is a smart, fair, diligent, and humble colleague. Given his exemplary record and reputation, it's no wonder that he's received multiple letters of support for his nomination. These include letters from 7 former SEC commissioners who have worked personally with Mark, 3 former chief securities regulators for the state of California with whom he directly advised, and multiple Asian American legal groups. Throughout his career, Mr. Uyeda has generously volunteered his time to help promote diversity at the SEC and throughout the legal community. For example, he previously served as the chairman of the SEC Asian Pacific American Employees Committee and the president of the Asian Pacific American Bar Association of the Greater Washington, D.C. area. And Mark Uyeda's nomination is historic for the SEC. If confirmed, he will be the first Asian Pacific American to serve as an SEC commissioner in the agency's 88-year history. I am very confident that as an SEC commissioner, he will faithfully carry out the agency's critical mission of protecting investors, maintaining fair, orderly, and efficient markets, and facilitating capital formation. Our loss here on the committee will be investors across America's gain. I am thrilled to support Mr. Uyeda's nomination, and I know he's destined to do great things. I hope he can be swiftly confirmed. Thank you, Mr. Chairman.
Senator Toomey, thank you for that introduction. I would ask the panelists to step up, the nominees to step up, and no need to sit down because we're going to administer the oath. So will you please raise your right hands, and do you swear or affirm the testimony you are about to give is the truth, the whole truth, and nothing but the truth, so help you God? Let the record reflect that they all answered in the affirmative. Do you also agree to appear and testify before any duly constituted committee of the Senate? Let the record reflect they all answered in the affirmative. Thank you. You may take your seats. If you would like to introduce your family members or friends that are with you today, I would invite you to do that before beginning your testimony. We will start with you, Mr. Barr, and we'll just go right down the line. Mr. Barr, you are now recognized to begin your testimony.
Thank you, Senator Tester, Senator Toomey, and other members of the committee. It's my honor to appear before you today for this hearing. I'm grateful to President Biden for nominating me to serve as Vice Chair for Supervision and a Governor of the Federal Reserve Board. My wife of 28 years, Hannah Smotrich, joins me today in the hearing room. I'm grateful as well to be joined by my 3 children. Itai is here with us in person, and Avital and Denis are joining us online. I'm thankful for their love and their support. My parents, David and Debbie Barr, imbued in me the deepest values of integrity and public service, and they are here with us in spirit today. For over 25 years, I have been working to help make the financial system safer, fairer, and better focused on the needs of businesses and households. I began my government career at the U.S. Department of State, where I worked on international economic matters. I then spent 6 years at the U.S. Department of the Treasury, helping to strengthen the Community Reinvestment Act, build community development financial institutions, support fair lending, and combat predatory lending abuses, and help bank the unbanked. I also worked at the Office of Management and Budget, where I ran an interagency task force advancing economic development in Washington, D.C. I joined the faculty at the University of Michigan over 20 years ago, following the advice of my mentor and friend, Ned Gramlich, former director of the University of Michigan School of Public Policy and longtime governor of the Federal Reserve Board. At Michigan, I've taught domestic and international financial regulation, conducted research about a wide range of issues in finance, and co-authored a leading textbook on financial regulation, law, and policy. Along the way, I've also developed programs to help small business owners in our local communities in Michigan. In the wake of the global financial crisis of 2008, I served as Assistant Secretary of Treasury for Financial Institutions and helped to develop and work with Congress to enact the Dodd-Frank Wall Street Reform and Consumer Protection Act of 2010. That basic framework is still with us today, and it has helped make the financial system stronger and work better for everyone. With the economy battered by the financial crisis, my team and I also work to support struggling small businesses and households and community development financial institutions. After my time at Treasury, I stayed engaged in critical issues affecting both national and international financial policy, while also deepening my commitment to our local communities in Michigan, working with community banks, and learning from advising private sector institutions. For the last 5 years, I've served as Dean of the Gerald R. Ford School of Public Policy at the University of Michigan. I've loved serving our community and have worked hard to advance bipartisan engagement, listening, and talking to one another across our differences in a way that can deepen our democracy and get practical things done. If confirmed as Vice Chair for Supervision, I would be strongly committed to the Federal Reserve's responsibilities to ensure that the financial system is robust and resilient, that innovation flourishes with clear rules of the road, and that the financial system operates fairly. Additionally, an important part for the roles for which I have been nominated is to serve on the Federal Open Markets Committee. Inflation is running far too high, hurting communities all across our country. I would be strongly committed to bringing down inflation to the Federal Reserve's target, consistent with the Federal Reserve's dual mandate of maximum employment and price stability. If confirmed, I look forward to working with all of you on this committee, where I have spent much time learning from you and collaborating with you on critical issues for our country. I would be honored to be confirmed as Vice Chair for Supervision and Governor. Thank you for your consideration, and I look forward to your questions.
Thank you for your testimony, Michael Barr. Next, we'll go to Mr. Lizárraga. Please begin your testimony.
Toomey, distinguished members of the committee, thank you for the opportunity to appear before you today. It is an honor to be nominated by President Joe Biden to serve as commissioner at the Securities and Exchange Commission. I would also like to thank House Speaker Nancy Pelosi for introducing me. I am proud to have been part of her team for nearly 15 years. Witnessing her extraordinary leadership up close and her dedication to building a more prosperous future for America's working families has been the privilege of a lifetime. It has also prepared me well for the role of SEC Commissioner. At its core, the SEC's mission is about the aspirations of all working families to secure a prosperous financial future, with the confidence that their interests will always be protected. To me, the SEC's mission is also deeply personal, dating back to my days growing up in a Southern California working class community. Neither of my parents graduated from high school. They immigrated from Mexico and began their life in the United States as farm workers in California's Central Valley. Like millions of families in our country, they sought opportunity wherever they could. In the absence of stable job prospects, my parents decided to run a Mexican food business out of our home. On nights and weekends, my sister and I helped them prepare the food, mostly Mexican-style sandwiches called tortas. My father then sold the food from his car at soccer games and at community shopping centers. Growing up, my father always encouraged me to study the newspaper's financial pages. He taught me the importance of saving and investing for long-term financial security. In those years, and unlike now, access to safe and mainstream investment opportunities was virtually non-existent. This limited my parents' wealth-building potential and their ability to grow their small business into a more established enterprise. My parents were also unable to save for retirement and faced constant financial strains. Their goal was for my sister and me to get an education. What little they had, they invested in us. I often asked how our financial system could have served their needs better. This life experience inspired me to pursue a career in public service. I focused on financial services policy where issues of investor protection, financial stability, and economic security all come together. In more than 3 decades of public service, both as a House leadership and committee staffer, I played key roles in all financial regulatory legislation moving through Congress, from the Sarbanes-Oxley Act to the Dodd-Frank Act and more. I also served as a presidential appointee at the U.S. Treasury and at the SEC, working to ensure congressional mandates were effectively implemented. A key lesson from my long experience is that fair and transparent markets benefit everyone, whether a pension plan participant, a retail investor, or parents investing in their children's future education. The most enduring lesson is from the 2008 financial crisis. Poorly regulated markets can have devastating consequences for working families and for the broader economy. If confirmed, I look forward to bringing my experience and unique perspective to the SEC. It would be an honor to work with the agency's talented staff and with my fellow commissioners to uphold the mission of the SEC of protecting investors, promoting fair, orderly, and efficient markets, and facilitating capital formation. I would approach the SEC's vital mission through the eyes of working families like my own and work with my fellow commissioners to make sure congressional mandates are robustly implemented. I would focus on making sure our regulations keep pace with rapid technological changes in our markets. And I would focus on facilitating capital formation for our job-creating small businesses, particularly in underserved areas. Our country's future prosperity depends on robust oversight of our capital markets. To me, this means safe and transparent markets that foster a level playing field for all market participants, meaningful protections for investors, and broad-based access to capital. As the speaker noted, my parents are here in spirit and are watching from home in California. And I'm also proud to be joined by my family today behind me, my wife of 22 years, Kelly Lizárraga, and our 5 children, Victoria, Diego, Elena, Samuel, and Alexandra. Also joining us today is my mother-in-law, retired Reverend Paula Warner. Thank you again for the opportunity to speak today, and I look forward to answering your questions.
Thank you, Jaime Lizárraga. I appreciate your testimony. Next, we'll go to Mr. Uyeda.
Mr. Chairman, Ranking Member Toomey, and members of the committee, thank you for the opportunity to appear before you today. With me in the hearing room is my wife, Messiah, and watching remotely from California are my parents, sister, and extended family. I greatly appreciate the kind words of Ranking Member Toomey in introducing me to the committee. I'm honored to have been nominated by the President to serve as a member of the Securities and Exchange Commission. I have a deep commitment to its mission to protect investors, maintain fair, orderly, and efficient markets, and facilitate capital formation. My first job was spending summers on my grandfather's produce route in Southern California. He drove a small truck, and I would help him pull off cartons of fruits and vegetables off the back to deliver to small restaurants and retailers. It was a family business run by him and his 2 younger brothers. My grandfather kept up this physical labor well into his 70s. Every day, even during the hot summers, he would always wear a collared, button-down shirt and work trousers, which were always neatly ironed. To me, that image has always represented the dignity of work. My grandfather had to build his business twice. First in the 1930s, when he dropped out of high school to support his 5 younger siblings after both of his parents died. The second time was after World War II, when he and his family, including my mother, lost nearly everything when they were forcibly incarcerated in internment camps pursuant to Executive Order 9066, just because they were Americans of Japanese descent. At the same time, my uncle was fighting in Europe with the U.S. Army's segregated 442nd Regimental Combat Team, where he was awarded the Bronze Star and served in Company E alongside future Senator Daniel Inouye. Finding startup capital was difficult for my grandfather, particularly in an era where racial discrimination was common. Yet he persevered and accomplished the American dream. The story of the immigrant family business has been often repeated in the Asian American community, whether it's a restaurant, dry cleaner, nail salon, or donut shop. And that perspective has helped shape my views on the need for startup financing and capital formation. Since graduating law school in 1995, I've continuously practiced corporate and securities law, spending the vast majority of that time in public service. During my career, I've advised on and helped implement major securities legislation, including the National Securities Markets Improvement Act, the Private Securities Litigation Reform Act, the Sarbanes-Oxley Act, the Dodd-Frank Act, and the Jobs Act. In 2004, I became the chief advisor to California's securities regulator, where we pursued an investor protection agenda and worked with the SEC and other state regulators. If confirmed, I would be one of the few state securities regulators ever to serve as a member of the SEC. During my past 15 years as an SEC civil servant, I've had the privilege of advising commissioners and chairmen as part of the executive staff, and have been part of the Division of Investment Management. Since January of last year, I've been detailed by the SEC to serve as Securities Counsel to Ranking Member Toomey as part of this committee, where it has been an honor to work with staff on both sides of the aisle, including Chairman Brown's staff. Before I close, I want to express my gratitude to the support and well wishes that I've received from my SEC coworkers on this nomination. Their efforts to protect investors have and will continue to inspire me every day. Thank you, and I look forward to your questions.
Mark Uyeda, thank you very much for your testimony. We'll now proceed to questions, and please know that some of the folks that are going to be asking questions are on virtually, and so you can work with that. Mr. Barr, I'm going to start with you. I want to thank you for your willingness to serve. I appreciate the opportunity to sit down with you in my office to hear more about your views and priorities. I asked you about Fed's independence. The ranking member talked about the Fed's independence in his opening statement. Can you describe to me why the Fed's independence is so important?
Thank you, Senator, for that question. The Federal Reserve's independence is longstanding and I think quite critical to its effectiveness as a nonpartisan institution, an institution that can make judgments purely based on the evidence, the facts in front of it. That's especially important with respect to its monetary policy duties. The market needs to have a confidence that the Federal Reserve's decisions are made based solely on the evidence. And the American public needs to have confidence that those decisions are based solely on the evidence in front of it. So its independence dramatically enhances its effectiveness. And I think you've seen, as other countries around the world have moved to a model of independent central banking, that's also helped in their institutions as well.
So why would it be a mistake to allow politics to influence the nation's monetary policy?
Thank you, Senator. If politics were to get involved in monetary policy, it would dramatically reduce the effectiveness of what the Federal Reserve does and what it says. It would reduce the effectiveness of what it does in the sense that it could lead to wild swings in policy that are based on politics rather than the evidence in front of it. And it would affect the effectiveness of what the Federal Reserve says because people would lose confidence that the judgments that are being made are based on the evidence in front of it. If confirmed as Vice Chair and Governor, I absolutely assure you that I will be and am and will be firmly committed to the independence of the Federal Reserve.
In the last administration, the president got on TV and tried to influence the chairman of the Fed. What would you do if that were to happen now?
Thank you, Senator. I would ignore that.
It's good enough for me. Mr. Barr, I'm very proud of the work that was done on 2155. I think it struck a right balance, and quite frankly, and maybe unfortunately, it was tested very, very quickly with the pandemic. And quite frankly, I think it showed that we struck the right balance. I think the work the community banks and the credit unions did across Montana and I think across the country was exemplary. So what is your view on the impact that S2155 has had on our financial system?
Thank you, Senator. During the passage of S2155, I supported aspects of the legislation. I was concerned about other aspects of it. I think the community bank provisions of that legislation were quite good and strong. And I also thought other protections added to the legislation on veterans and service members were spot on. And I think those community bank provisions worked well, both at the time and since. I did have some concerns that I expressed as the bill was being drafted that some aspects of the bill could weaken capital or liquidity rules for larger firms. Some of the concerns that I had were related to credit card banks and the large U.S. operations of foreign firms. A number of the concerns I had with the bill were actually addressed by a manager's amendment that came in that, for example, clarified that the U.S. operations of foreign firms would still be required to have intermediate holding companies. So overall, with the bill, I thought it was really quite admirable the way Republicans and Democrats worked together on that legislation. And I think if you look at the capital and liquidity in the financial system today, they're quite strong.
All right, thank you very much. I'm going to turn to Ranking Member Toomey now, but before I do that, I just want to express what a pleasure it has been working with you, Ranking Member Toomey, during this banking hearing.
And for so long. Thank you, Mr. Chairman. Professor Barr, thanks for meeting yesterday. I appreciate your acknowledgement then and again this morning that inflation is way too high. During our discussion, you said that if inflation persists, you'll do, and I quote, whatever it takes, end quote, to get inflation under control, even if it were to unfortunately trigger a recession, which I know no one wants, couldn't precisely predict, and I hope is quite unlikely. But just for the record this morning, is that a fair characterization of your view of fighting inflation?
Thank you, Senator. Yes, it is. I strongly believe that inflation is far too high today, and I'm committed to bringing it down to the Federal Reserve's target of 2%.
Great, thank you. Now, there's folks who have openly argued that climate change poses such an existential threat to humanity that we simply have to dispense with democratic norms and use financial regulatory powers to accelerate the transition to a lower carbon economy. So, Professor Barr, my question for you is, does the Fed's mandate permit the Fed to use its power to accelerate the transition to a lower carbon economy?
Senator, thank you for that question. The Federal Reserve's authorities here are important, but quite limited, quite narrow.
Right.
And those are to assess risks to the financial system from all sources, including
I understand,
climate.
Professor, I've got very limited time, and so I understand what the Fed's powers are. My question is, do you believe that the Fed's mandate allows it to use its power to decide to accelerate the transition to a low-carbon economy?
No, Senator. I think that the Federal Reserve is not able to allocate credit, should not be in the business of telling financial institutions to lend to a particular sector or not to lend to a particular sector.
And thank you for that. And so would you agree that that extends to the fact that the Fed does not have the authority to use climate-related stress tests for the purpose of penalizing banks for lending to energy companies, for instance?
Thank you, Senator, for that question. The only purpose of the Federal Reserve's scenario analysis or other measures should be to understand risks that climate might pose to the financial system and to work with financial institutions on measures to manage those risks.
Great, thank you. There have been in some quarters a great deal of hostility to bank mergers, especially in recent months where there appeared to be a de facto moratorium on approving mergers that would result in a bank of more than $100 billion in assets. Now, it's clear to me that bank regulators have no statutory authorization to impose a universal moratorium on bank mergers. So do you agree that the Fed does not have the authority to impose a blanket moratorium on bank mergers?
Thank you, Senator. I'm not aware of any authority with respect to a blanket moratorium on bank mergers.
Yeah, I think if there were such an authority, I think you would be aware of it. I think that's because there is no such authority. But I do want to point out, I'm concerned acting comptroller of the currency, Michael Hsu, has proposed conditioning regional bank mergers on their commitment to meet what would otherwise be inapplicable regulatory standards and requirements. To me, this is an attempt to establish this requirement. This attempt exceeds the OCC's authority. And ironically, making it more difficult for regional banks to merge could actually decrease competition within the banking industry by preventing larger regional banks from being able to compete with very large banks. So let me ask you this. Do you agree that regional bank mergers can, in some circumstances, actually increase competition in the banking industry by better enabling them to compete with larger banks?
Thank you, Senator. I think that bank mergers can have positive effects or negative effects on both competition, convenience and needs, financial stability. I don't have an a priori view. I think the merger should be conducted based on the evidence.
Okay, thank you. I do want to talk a little bit about the SLR also. The Fed announced in March of last year, I think, that it would consider modifications to the SLR, and the idea was to ensure that it serves as a backstop, not the primary driver of capital requirements. As vice chair of supervision, so that's over a year now, and we haven't seen the proposal, I think in part because the seat to which you've been nominated hadn't been filled. If you are confirmed, would you commit to expeditiously issuing a proposal to ensure that banks are not penalized for holding risk-free assets like deposits at central banks?
Senator, I see that time has expired. May I answer the question?
Sure. Yeah.
Thank you. What I'd like to do, if confirmed as vice chair, is to come in and take a look at capital and liquidity in the system, broadly speaking, to look at the SLR, to look at the Basel III so-called endgame rules that need to be proposed. and to try and take a look at this as a whole rather than piece by piece.
Okay. Thank you, Mr. Chairman.
Senator Brown has asked me to preside for a while, so we'll do that. I'm going to recognize myself. Mr. Barr, there's a serious diversity problem at the Federal Reserve. Latinos are the nation's largest minority. They make up 20% of the United States population, yet they have no representation in Fed leadership. I've raised this issue many times with nominees and sitting members of the Federal Reserve. I've heard extensively about what the Fed is supposedly doing, and I just can tell you right now that's just not sufficient. 62 million Hispanic Americans in the United States with a $2 trillion domestic marketplace impact deserve a seat at the table where our nation's most important economic decisions are made. It's the reason that I voted against Chairman Powell. So I'm eager to hear how you would deal with this question. If confirmed, what steps would you take to improve minority representation, particularly Latino representation in leadership roles at the Fed?
Thank you, Senator, for that question. I agree with you that diversity and equity and inclusion are important goals for the Federal Reserve to pursue. In my experience in prior jobs at the Treasury Department and at the Gerald R. Ford School of Public Policy, those have been really quite important goals of mine as well. And what I've been doing in my own work is to try and build a pipeline of people who can then come in, get increasingly senior jobs, positions. It starts in our work at the Ford School, for example. We start in high schools now, going out into high schools and educating students about the opportunities of public policy. We run a summer program for juniors in college to get them engaged in public policy and prepare them for graduate training. We do a lot of work to build out the graduate pool. We then work on the postdoctoral pool, the faculty pool, and so really kind of a holistic approach.
I appreciate that, and preparing the pipeline obviously is one element. Mm-hmm. But the problem is there are many qualified individuals now who could enter into the Fed system. There are qualified individuals who should be on the on the regional banks. So would you commit to working with my office to increase Latino representation at the Fed?
Yes, sir. I would be delighted to work with your office on these issues.
You also have an important role to play in the selection process for presidents and members of the board of directors of the 12 Federal Reserve Banks, which in its 108-year history has never had a Latino sitting on it. Would you commit to working to ensure that diverse candidates are considered for these positions?
Yes, Senator. I think that is a quite important goal for the Federal Reserve, and I'd be delighted to work on that.
And it's not just to do the right thing. Study after study shows us that the more diverse boards, the greater the profitability and the bottom line. Mr. Lizárraga, congratulations on your nomination. If confirmed, you'd be the only Latino currently serving on the SEC Commission, or Senate-confirmed federal financial regulator for that matter. And Mr. Uyeda, congratulations to you as well on your historic nomination. The asset management and investment advisory industries are overwhelmingly white and male. Studies consistently show that greater diversity leads to greater profitability, as I just suggested. So in an effort to improve performance and thereby benefit retail investors, the SEC's Asset Management Advisory Committee unanimously recommended that the SEC take concrete actions to improve diversity in these industries. So I want to ask both Mr. Uyeda and Mr. Lizárraga, can you commit to bringing these recommendations before the Commission for a vote so that we can bring transparency and diversity to the industry and ultimately deliver better outcomes for investors?
Thank you, Senator, for that question. And I embrace diversity and inclusion as fundamental values, and I'm proud of the work that I've done in Congress on that issue, including in the setting up of the historic House Diversity Office that serves the entire House of Representatives. I'm also aware that this is an issue that has received a lot of attention in the shareholder proposals, and it's something that, if confirmed, I intend to stay very active on and
All
look forward to
I'm
working
looking
with you.
for is a vote. You guys can vote it down if you want to, but the SEC Management Advisory Committee unanimously, that's a very broad spectrum of individuals, made this recommendation. So all I'm looking for is a vote before the SEC. If you all don't think it's a good idea, you can vote it down. If you think it's a good idea, you can support it. So will you seek, if you're confirmed, to have a vote before the SEC on this advisory committee's recommendations?
If confirmed, I look forward to exploring that possibility, recognizing that I would need to look into the details of that process, but I agree with the sentiment that's expressed by the advisory committee.
Mr. Uyeda?
When I was on the SEC staff, I had the privilege of help standing up the Asset Management Advisory Committee. I think I've seen the incredible amount of work they've put in on these recommendations. And all of them, not only just for AMAC, but the other advisory committees, the recommendations need to be taken very, very seriously by the Commission. If confirmed, I will commit to considering any item that Chair Gensler, who oversees what items go onto the agenda, are put up on diversity and improving inclusion in the asset
You've
management.
both learned in your time in Congress to be very cautious in your answers. I'm going to submit questions for the record. I'd like to support both of your nominations, but I just simply want to hear a yes or no. If Chairman Gensler puts it up, then you can be advocates to Chairman Gensler to put it on, right? You're not just stoic figures there. You have a role to play if you're ultimately confirmed. Senator Rounds is next.
Thank you, Mr. Chairman. First of all, thank you all for placing yourselves within the nomination process. This is very important that we have the opportunity to look and to consider. My questions will primarily be to Mr. Barr. Mr. Barr, I appreciated the opportunity to visit with you in my office this week, and this is an opportunity to review a little bit of that. And I just wanted to begin. Senator Toomey touched on this already, but just to clarify, and this will save me from putting a question for the record in front of you. It sounds like you are agreeing to considering permanent modifications to the SLR. When do you think we could expect to see action on that? I think this is really important that we address it. We know that we've got other members on the board that have already committed, but we'd like to hear a commitment that we move forward with this consideration.
Thank you, Senator Rounds, for that question. It was wonderful to spend time with you in your offices earlier. As I said to Senator Toomey, what I'd like to do is to come into this position, if confirmed, and wrap my arms around the whole capital and liquidity picture. That includes the SLR, includes the Basel III endgame and stress testing and the like, and make sure I understand the full package of potential issues. I want to make sure that I understand how the institutions are doing with respect to emergent risks as well.
Well, let's cut to the chase on that part, because even right now, in the middle of what is significant inflation, the Federal Reserve has written in its most recent supervision and regulation report that was released on Friday, and I'll quote it: "The banking system remains strong overall with robust capital and liquidity and improved asset quality." That would seem to point to the fact that the system right now is working, and what we're suggesting is that the modifications to the SLR would be appropriate as well. And we're just hoping that, I guess what I'm asking is that you would move forward fairly quickly to address the SLR issue.
Thank you, Senator Rounds. I agree with you that capital and liquidity in the system today is quite strong. But what I'd really like to do, and I think makes sense, is not to think about the capital rules piecemeal, but to understand them as a group.
But if you're talking
before
about a
assessing.
long-term study, you're talking an extended period of time. I just want to clarify that this isn't going to take years to get done.
Senator, it will not take years to get.
Will it take months to get done?
I can't specify the exact time period, Senator. I promise that I take the issues seriously. They're the reason that I am focused on the resilience of the financial system, and I promise to address the issues in a serious way.
Okay. Just a few minutes ago, as we were looking at this, Senator Tester started out and he talked about the success that we had with 2155, and you and I spoke about 2155 and the fact that I'd questioned whether or not you would have supported a number of the changes that were in there. Part of what 2155 did and focused on was the ability to tailor based upon the size of the different banks and so forth. Let's go back into that a little bit. It sounds like you still feel that tailoring based on size and a risk profile is good for banks. And it sounds specifically that, in particular, community banks, but what about regional banks as well? It seems to me that if you're tailoring, can't you apply that to regional banks as well?
Thank you, Senator. Yes, I think that tailoring or a graduated approach, a tiered approach, makes sense for the financial system. You want the strictest rules for the very largest institutions, and you want gradually less restrictive rules as you get to simpler, less complex, less risky institutions. And you particularly want, with respect to community banks, the simplest of rules, given the potential for regulatory burden being very high
What about,
for
say,
them.
banks 50 billion and over, regional banks?
I
Reasonable
think
to
that
look at
that same principle of tailoring, or as I think of it as tiered approaches to regulation, makes sense at each of the kinds of size levels.
Each of the kinds.
I strongly agree with the principle of a tiered approach. Where I had disagreement was on whether that approach was exactly what I would have done for each of those institutions. Obviously, Congress has spoken on that.
Tailoring recognizes that you can modify it based on the size. Let me ask this, just in turning to another topic, I've long pushed our U.S. representatives at the International Association of Insurance Supervisors to advocate in favor of the aggregation method as an alternative method to the ICS. Before confirmation, Governor Brainerd indicated unequivocal support for this position and noted that the Fed continues to advocate for the aggregation method internationally. Mr. Barr, if confirmed, will you commit to the position outlined by Governor Brainerd in defending the use of the aggregation method and the state-based system of insurance regulation? This is a very important question.
Senator Rounds, I agree with Governor Brainerd about that approach.
Thank you. Thank you, Mr. Chairman.
I understand Senator Warner is with us virtually.
I am, Senator Menendez. Thank you so much. And I say to my colleague, Senator Rounds, it was, one of the reasons we have tailoring is because we did do the reforms in 2155. And while Mr. Barr may not agree on exactly where the cut lines should be, and there was some arbitrariness in that, I do think it's the right approach. Mr. Barr, I'm going to start with you on CRA. This is a topic I know you've written a lot about, talked a lot about. I think you made a thoughtful review in 2019. I think the Fed, FDIC, and OCC's recent proposal, it's extensive. Can you? How much have you reviewed that so far? How do you think it will stand the test of time? Are there areas that you would like to see moving further on? Give us your take on CRA.
Thank you, Senator Warner, very much for that question. I think that the draft proposal from the three banking agencies is a good one. There was an enormous amount of work that's been put in to that, and I think it shows in the proposal. I was especially glad to see the three agencies working together after there was a period of time where there was not that kind of alignment. I think that the certainty that provides for the financial sector and for communities is really important. There are a few areas I just want to continue to review in the rule, and I also look forward to reading, if confirmed, reading the public comments that come in on that rule. Would like to be sure that the rule is appropriately taking on issues of financial inclusion. The rule has some tiering with respect to application of the rules. Well, I would like to make sure that also is taking into account the needs of community banks in the process. But I was very much encouraged by what I read in the rule.
Did I just disappear? Folks, whoops.
There you go. We can hear you. We can see you.
Am I looking as washed out as was it like? I think my battery is running down, and it's a little embarrassing since I invented cell phones that I can't figure out how to work a computer. But
Send you some makeup.
You're
all right,
looking a
I'm going to
little
get my
peaked,
last question
Senator.
in, no matter how much kind of heckling from my colleagues comes along. Mr. Barr, CRA in my mind fits in with racial wealth gap. It fits in with whole questions of access to capital. This is a topic I've talked with you about and every member of the Fed about how we can be more engaged with CDFIs and MDIs. Everybody gives me attaboy, I agree. Frankly, the reality of the Fed moving in a meaningful way on these questions, I think, has been less than the rhetoric. There's not been as much there. And I would point out again, I think, the first round of PPP, while well-intentioned, showed, huge lack of take-up by, minority-owned businesses. I know Senator Cortez Masto, this is something she's worked on, Senator Van Hollen's worked on. I really am going to need, I look forward to supporting you, but I think the Fed is going to really need to lean in, and particularly from the regulatory standpoint, regulatory supervision. There are lots of banks in the chain who, even beyond CDFIs, that say they would like to do more. And my fear at times is that you guys say one level of comment at the national level, and that never translates down to the examiners. The examiners are still dinging institutions that don't dot every I and cross every T, particularly when we're trying to deal with underbanked communities. So in my last minute, can you put a little more meat on the bones about when you get confirmed, what you'll do on this access to capital issue for underserved communities, and particularly how CDFIs and MDIs can play a role?
Thank you, Senator, very much for that question. I very much look forward to continuing to work with you on these issues if confirmed. I think that community development financial institutions and minority depository institutions and other community banks have played critical roles in expanding access to capital for underserved communities, for low and moderate income communities, for minority communities. And that, to my mind, is a critical role. I think the Federal Reserve can play an important role, as you suggest, in supervision and in regulation. And I've had the same experience that you indicate about the disconnects between Washington and the field. I'd be quite attentive to.
I know my time's up. I just want to again say thank you to so many of my Republican colleagues, frankly led by Senator Crapo, who helped really work to get that $12 billion. First time we put our money where our mouth is in terms of support for CDFIs and MDIs. Thank you, Senator Menendez.
Thank you, Senator Warner. And now we will hear from Senator Moran for 5 minutes.
Chairwoman, thank you. A couple of questions for our SEC nominees, and thank you all for your willingness to serve. And I look forward to developing a solid working relationship with each of you. For Mr. Lizárraga and Mr. Uyeda, this I hope is a yes or no answer, so I can get to other questions as well. Mr. Lizárraga, do you agree that any change to the disclosure rules, which would more than double the current cost of disclosures with an outsized impact on smaller companies, should be subjected to robust public debate, including in front of this committee, before those rules are finalized?
Yes.
Mr. Uyeda?
Yes.
Thank you. Mr. Lizárraga, do you support competition among asset managers and believe that investment firms should compete to manage investors' money?
Senator, I believe in competition in all segments of our markets.
I'll ask both of you, but let me add a little to that question. It is related to the following. Do you believe that smaller firms, such as those with less than $500 billion in assets, which seems less than small to me, but should have the same opportunities as the multi-trillion-dollar firms to list exchange-traded products in order to compete and serve investors?
I'm not sure I understood the last part of your question, sir.
Do you believe that smaller firms should have the same opportunities as multi-trillion-dollar firms to list exchange-traded products in order to compete and serve investors?
Thank you, sir. I believe small firms, small issuers should be treated fairly, just like all market participants should be in So yes, I agree that they should be equitably treated.
This isn't a trick question. There's not anything I'm trying to capture here other than to make certain that what I have seen where small firms have been excluded from the ability to compete with larger firms due to decisions made by regulators, I want to make certain that you have an appreciation, that both of you have an appreciation for those smaller firms and will not do anything to disadvantage them and their capability of attracting and managing funds for clients as compared to those large multi-trillion-dollar firms.
Yes, sir. I agree with that principle generally, yes.
Thank you. Mr. Uyeda?
Yes. And in fact, I would point out that consideration of competition is statutorily mandated by Congress that the SEC consider. So efficiency, competition, capital formation are three factors that, by law, the SEC must consider in any rulemaking. In addition, the SEC has a mandate under the Regulatory Flexibility Act to look at the impact on small entities, and a number of those definitions, particularly in the asset management space, I think are potentially outdated, need to look at. The current small entity definition is just $25 million of assets under management or less, which, as you noted, 500 billion these days seems like quite a small amount. So that would be something to think about, updating those limits.
Thank you both for your answers. It's the follow-up to that, which I think, I'll ask you if you'll commit to working with this committee to ensure that smaller firms have the opportunities and necessary infrastructure to compete with the largest management firms by allowing them to offer exchange-listed products.
Yes, sir. I commit to working with this committee on all issues before us today.
It's a good answer.
Yes, I also commit to working with this committee on consideration of those issues.
Mr. Barr, in June of 2020, you stated that the continued reluctance of the Fed to force banks to preserve capital in the face of global pandemic and economic collapse. You talked about that circumstance. It seems that throughout the pandemic and now, capital liquidity levels in the banking sector have been a key strength for our economy. And my question is, does that fact, if you agree with that, does that fact lend credence to the banking sector being adequately prepared for the next recession?
Thank you, Senator, for that question. The statement I made was in the context of the global pandemic having just hit the United States. And before Congress and the Federal Reserve took the really extraordinary actions they took to protect our economy, I was concerned that the paying out of dividends and permitting the cash repurchase of shares was dissipating capital when it needed to be preserved. But I agree with you that capital and liquidity today is quite strong.
Thank you. And I'm out of time. Thank you.
Thank you, Senator Moran. We will next hear from Senator Cortez Masto, who is joining us virtually, I believe.
Thank you, Madam Chairwoman. Congratulations to all three of the nominees. So appreciate your willingness to serve. Let me start with Mr. Uyeda and Mr. Lizárraga. Thank you as well for everything that you've done in the past, supporting that you've committed to. Let me ask you this. And this is a concern that I think many of us have, we've seen social media play a growing role in market manipulation. And the SEC has actually filed civil fines over tweets in the past as a result of this. So I'm curious for the two of you, what are your thoughts about market manipulation on social media, and what role should the SEC take to curb this practice? And Mr. Uyeda, let's start with you.
So the SEC has long-standing authority to pursue enforcement actions for manipulation of the securities markets. Social media is definitely one avenue in which that manipulation can occur. But the use of the internet to engage in to manipulate prices, including in pump and dump schemes, is nothing new. In fact, I think it was a couple decades ago when the first enforcement actions were brought for the use of internet bulletin boards, as they were called during the time, to use it to disseminate false and misleading information. The SEC, my experience at the SEC is that there is an ever expanding set of technological tools to identify manipulative behavior. And if confirmed, that's something that I would be interested in working with to make sure that the hardworking staff have all the tools at their disposal to take and investigate potential market manipulation.
Thank you. Mr. Lizárraga.
Thank you, Senator, for your question. I think robust enforcement of our securities laws lowers the risk in our capital markets, protects investors, and lowers the cost of capital. To the extent that there's fraud and market manipulation wherever it occurs, I think the FCC has an obligation to pursue that. Social media does facilitate, in some instances, these violations of the law, and I believe in prioritizing enforcement actions that address that. And recently, as you may be aware, Chairman Gensler added some resources to the Enforcement Division to address some issues related to this, to the digital space, which may also include monitoring what happens on social media.
Thank you. Mr. Barr, let's talk cybersecurity. We haven't had a chance to talk that yet. As you well know, banks and our other financial institutions in many ways are on the front lines of the growing rise in crime happening in cyberspace. Our nation's banks must take appropriate risk mitigation from incursions from bad actors, both domestically and abroad. So can you talk a little bit about your experience in cybersecurity and data privacy and safety, and what role cybersecurity plays in fostering stability, integrity, and efficiency in our economy?
Thank you very much for that question, Senator. Cybersecurity is really essential for risk mitigation, risk management, and the financial system. Cyber risk is a very urgent risk. It's with us today. And I think it's quite critical that both the Federal Reserve and the other federal regulatory agencies and the financial sector itself continue to invest and try and stay ahead of the curve. It is a constant process. My own experience with cybersecurity relates to my work at the U.S. Treasury Department, where I oversaw, among other things, the Office of Critical Infrastructure Policy. And I've also done work with firms engaged in anti-fraud and other measures. And I've written about the need for international coordination on efforts to address risks from cybersecurity in a way that continues competition and advances the ability of financial institutions to serve countries around the world. So it's an issue that is quite central and I'd be focused on.
Great. I'm glad to hear that. Thank you. Thank you again. Congratulations.
Thank you, Senator Cortez Masto. We'll now turn to Senator Daines for 5 minutes.
Thank you much. Professor Barr, you've previously voiced concerns regarding the regulatory relief put in place following the enactment of Dodd-Frank. Specifically, you were a very vocal critic of Senate Bill 2155. That was the 2018 Dodd-Frank rollback that thankfully passed the Senate with an overwhelming support, had a strong bipartisan support by 2-to-1, more than 2-to-1 margin. You stated at the time that passing the bill would be, quote, a significant mistake. You mentioned earlier in this hearing that many of your concerns were addressed by a manager's amendment. My question is, do you still think that passing that bill was a mistake?
Thank you, Senator Daines. As you mentioned, a number of my concerns were addressed by the passage of a manager's amendment, as well as subsequent regulation, for example, that made it clear that the custody bank provision could only genuinely be used by custody banks, which was an area
looking
of
back,
concern.
do you still think passing that bill was a mistake?
I think, on balance, again, I would have chose a different balance. I don't think that, I think reasonable people can disagree about that. It obviously garnered widespread support in the Congress, and I would be, quite committed to implementing the law as written by the Congress in doing that. And when you look at overall capital and liquidity level in the system today, as I have said previously, it's quite strong.
Now, what are your views on the regulatory tailoring provisions that were included in that bill 2155? And how would you approach these provisions in terms of implementation without the Fed?
Thank you, Senator, for that question. As I indicated earlier in response to Senator Rounds, I think a tiered approach, a tailored approach to regulation makes a lot of sense. I think the strictest rules ought to be applying to the largest institutions, and there should be graduated approach below that. And especially care ought to be taken with respect to community banks who have difficulty meeting the regulatory burden. So I'm a strong supporter of the principle of tiered regulation.
I want to turn to CFPB for a moment. With regard to the CFPB, you've stated, and I quote, "Attacks on its structure, budget, director, and authorities are pretext for weakening consumer protections in general." You've also stated that Republican opposition to the CFPB during the Dodd-Frank debate was, and I quote you, "all about not wanting consumer regulation." Do you stand by those very partisan views?
Senator Daines, when I hear those, I think they're exactly the kinds of things I tell my students not to do. I think they were intemperate remarks, and I don't think that is a good way to engage in productive dialogue with people you disagree with, so I regret them.
Thanks. In light of the Supreme Court's decision that the CFPB's original governance structure, which you helped to design, was unconstitutional, do you acknowledge that Republican concerns may have had some merit?
Thank you, Senator. My concern about the constitutionality was not about whether the particular choice was a good choice or a bad choice. It was about who gets to decide, and my strong view is Congress gets to decide. So you get to decide if you want to structure a federal agency with a commission or a board or a single director. I think Congress ought to be given a great deal of deference in that by the judicial branch. And in history, Congress has used a wide variety of techniques to establish agencies. I think that's the right approach.
Kind of switch to the issue of climate change. Do you believe that climate change is among the top 3 threats to financial stability? Because we've heard that from witnesses here at this committee in the past. What are your views there? Is it one of the top 3 threats?
I think climate change is an interesting example because it's a very long-term issue, but we need to figure out how to wrap our arms around it today.
Would it rise as you assess priorities and thinking through the lens of which you will, if confirmed, govern? Do you believe it's one of the top 3 threats to financial stability?
Senator, I've not thought about a priority ranking of the threats facing the financial sector. I think the job of the vice chair, if confirmed, is to think about the range of emergent threats to the financial system, and then to design a regulatory approach and to work with financial institutions so you can have a consistent risk management framework. You know, if you think back before the global pandemic was not on anybody's list of the next threat to the financial sector. So I think it's just important to be humble about our understanding of those sets of risks.
All right, thank you.
Thank you, Senator Daines. We'll now hear from Senator Reed for 5 minutes.
Thank you very much, Madam Chairman. Mr. Uyeda and Mr. Lizárraga, I think I'm close on both scores. The SEC has recently proposed a rule for public companies that would require cybersecurity expertise on the board or some mechanism to ensure that cybersecurity is taken into consideration. And I just starting with Mr. Lizárraga, do you believe that that's critical and should be implemented quickly?
Thank you, Senator, for that question. I think it is essential to bolster cybersecurity at the SEC and at its regulated entities as a matter of principle. Yes.
Thank you. Mr. Uyeda?
Yes, it's correct,
sorry.
Senator Reed. Yeah, so without prejudging the current proposal, which is out for public comment, just generally, I think cybersecurity is a very critical threat, particularly facing the financial services industry. There can be very significant fallout and consequences from a breach, and the SEC has an obligation, particularly for the broker-dealers, transfer agents, clearing firms, investment companies that it oversees, to ensure that there's appropriate efforts to protect against cybersecurity threats. Then I would also add, it's very important for the SEC itself as an agency to bolster its cybersecurity defenses. The SEC, during my time there, has been subject to various intrusion effects, and it's the information clearing process, for instance, that the Edgar system provides is significant, and if there was an outage, that could have market consequences.
Well, thank you very much, both of you. Mr. Barr, cryptocurrencies have been in the news recently. Do you have concerns that they are inherently vulnerable to crises like we're seeing? There's been a huge meltdown. Could you give us an idea of your perspective on cryptocurrencies as you enter the...
Thank you, Senator Reed. I think advances in technology, including cryptocurrency, have some potential for upside in terms of economic benefit, and then also some significant risks. And I think of those risks in functional terms depending on the particular kind of use that the cryptocurrency is being undertaken for. So, for example, with respect to crypto assets generally that are invested in as an asset class, the primary concern is investor protection, and that really is the responsibility of other agencies. But in issues such as stablecoins, there could be financial stability risks. And I think it's quite important that Congress and regulatory agencies wrap their arms around those financial stability risks and regulate so that we don't have situations where people are holding an asset that they believe is a cash instrument, but it actually is not. That can have both significant investor protection problems, but also financial stability risk, run risk.
Mm-hmm. The Federal Reserve, I understand, has been exploring whether to introduce a central bank digital currency to facilitate the ability of people to make digital payments, which are quite popular. Have you given any thought to that issue?
Thank you, Senator. I think the development of a central bank digital currency requires a lot more thought and study. I think that the Federal Reserve's discussion paper on this is a good starting point. As Chair Powell previously indicated, if this is an area that the Federal Reserve decides makes sense to move forward on, it really should be with the buy-in of the Congress and the executive branch, not something undertaken lightly. And I think that's the right view. If confirmed, that's the view I would take as well.
Thank you very much, Mr. Barr. Gentlemen, thank you.
Thank you, Senator Reed. Senator Tillis is recognized virtually for 5 minutes.
Thank you, and thanks to the witnesses. Congratulations on your nominations. I want to start very quickly with having the SEC nominees pronounce their name. I've got a little crisis of confidence since I've heard 4 or 5 different pronunciations.
My name is Jaime Lizárraga.
Lizárraga.
And mine is Mark Uyeda.
Uyeda. Thank you. Okay, I got the phonetics right. I just wanted to make sure they were the right ones. I'm going to come back to you all, but I want to start with Mr. Barr. Mr. Barr, I actually want to start where Senator Daines did on Senate Bill 2155. I've heard your comments and how some of the amendments allayed some of your concerns, but what I played an active role in getting that bill passed and getting strong bipartisan support. What aspects of the bill do you, and I also heard you say that you would faithfully implement the strong bipartisan support will of Congress, but what areas of the bill do you think represent or are areas of concern for you as you move forward to confirmation?
Thank you, Senator, for that question. Really, I would like to take a look at capital and liquidity in the system as a whole. I don't think it makes sense to be backward-looking and analyzing, this or that change in the law from the past. What I'd like to do, if confirmed, is to look at capital and liquidity as a whole. And as I said, capital and liquidity in the system today, I think, is quite strong. Again, I agree with the basic principles of the legislation, the idea of tiering of financial regulation based on risk and based on size. And that's an approach that I would bring to the implementation of that law if confirmed.
Okay. Another area I want to touch on, it relates to climate. Are you aware of the Federal Reserve Bank of New York? I believe it was a staff research paper that was titled, "How Bad Are Weather Disasters for Banks?" Are you familiar with that staff report?
Yes, sir, I am familiar with it.
Do you recall the main takeaways of that report?
It's been a while since I've looked at it, but I think the main takeaway was that in the last couple decades or so, there haven't been any weather events that have led to the failure of a bank.
Yeah, I think the ones that stick in my mind are the takeaway that larger banks were barely affected. Smaller banks showed minor impacts, but nothing large enough to even remotely threaten bank solvency. And then post-disaster, an actual increase in loan demand. So I think as we talk about, we've got two pieces. We have customers of banks who probably have to look ahead and see their own exposures. But the banks themselves seem to be relatively safe against disasters, at least in this story. And I think that has to be instructive when we have regulators talking about climate change being a major factor in future regulation. So that's just a point of information. Happy to let you comment, but that's something I think we should take into account as we weave in climate change in any regulatory regimen for the banks. And with that, Mr. Lizárraga and Mr. Uyeda, I want to ask you all a little bit about resources. I know that the SEC is on a really fast pace now, 25 plus proposals this year, hundreds of pages per proposal, with almost just as many questions coupled with short comment periods. It's moving very, very quickly. So I have a question for you all on two fronts. Number one, how would the SEC have the bandwidth and staff support to get these proposals done right? So that's an internal SEC question and resourcing. And just with the sheer number of proposals, how can we make sure that some of the smaller entities that would like to weigh into the process with these abbreviated comment periods, how can we be sure that we get the resource balance right, both at the SEC and among those who have something to say about the proposed regulations?
Thank you, Senator. With regards to the first part of your question, I have not been privy to the internal decision-making, so I'm not in a position to comment on that. But I do think that it is important for stakeholders to have an opportunity to comment on these proposals. And in some instances, smaller issuers do have some relief included for them. But as a general matter, I believe in the principle of stakeholders having an opportunity, a meaningful opportunity to comment on these proposals.
Mr. Uyeda?
Yes, I believe that the ability of all stakeholders, whether large or small, to comment as part of the Administrative Procedure Act notice and comment process is critical to make informed decisions and have a rational basis for those decisions as required by law.
Thank you. I do believe there's been some positive discussions with the SEC to discuss this issue, and we're going to continue. I'm going to continue to look at that. And I think I've spoken with members on the other side of the aisle who share the concerns. So, Mr. Uyeda, thank you for your comments. Congratulations again to all three of you for your nominations.
Thank you, Senator Tillis. Senator Warren is recognized for 5 minutes.
Thank you, Madam Chairman. Before I dive into my questions, I'd like to briefly address the ethical standards to which we hold our government officials. Mr. Barr, you're nominated to serve as one of the nation's most powerful regulators. Ethics rules require you to divest your holdings in stocks and other investments, which include investments in at least half a dozen crypto-related companies, if you are confirmed. But I previously asked you if you would go further and make the same historic ethics commitments that several other Fed nominees have made. Will you commit not to seek employment or compensation, including as a result of board service, from any company that has a matter before the Fed or any financial services company for 4 years after you leave government service?
Thank you, Senator Warner. Yes, I have committed to doing that, and I will do that.
I very much appreciate that. You know, these commitments are important because one of the key challenges that all three of you will face, if confirmed, is crypto. Last week, the cryptocurrency market tanked again. The latest crash was triggered by a run on Terra, until recently the third largest so-called stable coin by market cap. Turns out it was not so stable. If you put $1,000 into Terra USD 10 days ago, while it was still being promoted as a safe bet, today you'd get $90 back. And Terra isn't alone. $1,000 invested in Bitcoin in November would be worth $438 today. In fact, the average investor who put money into this can't-miss investment since last fall is underwater, a fact that the celebrity endorsers seem to have skipped over. But let's talk about who really lost money. Not the rich folks, not the insiders. No, it's ordinary investors. Online investor forums have been flooded with harrowing posts by people who feel they have nothing left and no way out, some with their life savings wiped out. It smells a lot like 2008. So what I'd like to do is run through protections for ordinary investors in the crypto market and how they compare to protection in other financial markets. So, Mr. Barr, if I can, let's start with you. If I bought a company's stock, even the most hyped up, junkiest one listed on the New York Stock Exchange, could I be reasonably confident that the company is following basic rules that protect against fraud, insider trading, and sloppy cybersecurity protocols?
Thank you, Senator Warren. The area of jurisdiction obviously is within the expertise of the SEC, but I think that is a reasonable basis for concluding that.
Okay, so there would be that protection because right now, stablecoin and crypto token users aren't getting that same protection. Now, some stablecoin boosters claim they're safe because their stablecoins are backed by real assets like treasuries and cash, not fake tokens and an algorithm. But during last week's market turmoil, Tether, the world's largest stablecoin market cap, broke its dollar peg. And that was scary because it's an open secret that Tether is not actually backed one-to-one by treasuries and cash like it claims. So, Mr. Lizárraga, let me turn to you. If you invested in a money market fund, would you generally have confidence that the fund was actually backed by the liquid, high-quality assets that it claimed it was?
Thank you, Senator. Yes, SEC rules require money market funds to disclose their assets and to have those disclosures audited by independent third parties.
All right, and now let's compare that to stablecoins. Are stablecoins currently providing audited disclosures that allow verification that they're backed by quality assets?
To the best of my knowledge, no.
No. And in fact, asked why they wouldn't produce audited financial disclosures, Tether's executive said it's because they don't want to spill their, quote, secret sauce. I believe them. Tether doesn't want investors to know what is and what is not backing up this so-called stable coin. And that is a gigantic red flag. So I'm going to do this really fast. Let me do one more. Mr. Uyeda, if you wanted to buy stock for a company listed on the New York Stock Exchange, could you be reasonably confident that the exchange wasn't trading against you or had other conflicts of interest that could put you at a disadvantage?
Yes, exchanges have to have policies to mitigate or eliminate any conflicts of interest.
Okay, very much unlike what happens in stablecoins. So, any investment involves risk. That's how markets work. But a market without rules is theft. And right now, regular investors in stablecoins and crypto aren't getting the baseline protections available in other financial markets. Count the ways that consumers can be cheated. No basic protections to protect against fraud, no review of cybersecurity, no audited financial disclosures, no protection against conflicts of interest, no cop on the beat to police market manipulation. There's not even any assurance that the other person on the end of a transaction isn't a terrorist, a money launderer, or a Russian oligarch on the sanctioned list. I understand the three of you may differ on how to regulate the crypto market, but addressing these kinds of risks will be your responsibility. So while Congress is working to set up guardrails on crypto, I urge you to use the tools you already have at your disposal to protect investors, to protect our financial system, and to protect our economy overall. Thank you.
Thank you, Senator Warren. Senator Kennedy is recognized for 5 minutes.
Thank you, Madam Chair. Congratulations, gentlemen. Professor Barr, you worked for Secretary Geithner, and would it be fair to say that the two of you and others, as a result of the meltdown in 2007 and 2008, you rewrote the rules for Wall Street?
Senator, thank you for that question. I would say that as a result of the meltdown, Congress rewrote the rules for Wall Street, and the regulators have been implementing those rules since Congress rewrote them.
I'm not trying to put words in your mouth, and I'm not trying to trick you. You and Secretary Geithner sort of provided the roadmap. Was that accurate?
Thank you, Senator. The Treasury Department issued a white paper in the spring of the year after the financial crisis, and that roadmap we then translated into draft legislation we shared with
Professor,
with the Hill.
Don't stall me. I've got a lot of other questions. After you and Secretary Geithner rewrote the rules for Wall Street, and Secretary Geithner left government, where'd he go?
Senator, I believe that he went to work for a private equity company.
He's at Wall Street, right?
I'll let you define what that is, sir.
And I believe you just committed to Senator Warren that you wouldn't do that.
Senator, when I left the government before I went back to academia, that's my plan, is to return back to academia.
Okay.
And
I appreciate that. Do we still have banks that are too big to fail?
Senator, I think the answer to that question is always a work in progress. I think capital and liquidity in the system is very strong. The rules that Congress put in place after the financial crisis make it much less likely that such a financial firm could get itself into trouble and in a way that would cause problems for the broader economy.
Well, if J.P. Morgan, if you're confirmed, if J.P. Morgan came to you and said, we're going down, would you bail them out?
Senator, that is not an available option after the financial crisis rule book was put in place. They'd be put into orderly liquidation under the rules that Congress laid out.
Okay. Do you consider yourself a Keynesian?
Senator, I am not an expert either in macroeconomics or in Keynesianism, but I would suggest that I follow normal, modern rules of macroeconomics, including the teachings of Keynes.
Well, Professor Keynes said that in order to get out of a recession, he recommended having the government deficit spend in order to stimulate your economy. Do I have that right?
That is one of the lessons, yes,
Right.
sir, of his history.
Okay, and a lot of people stop there. They don't read the next page. He also said that once your economy is recovering, you should stop deficit spending, did he not?
Yes, I think the basic idea is that deficit spending can be used to bolster the economy in good times, and that government debt should be reduced in good times.
And we haven't done that, have we?
It's been a very long time since the Congress has reduced spending in line with expenditures.
And I believe on the next page, after the next page, in Professor Keynes' seminal work and others, he said, when the economy's recovering, not only do you stop deficit spending, I believe he recommended paying the money back, didn't he?
Senator, I'm not sure I can go page by page with the precision you have.
But he said once you stop deficit spending in the economy's recovery, you eliminate the deficits, didn't he?
The basic idea, as I said, and I think it's consistent with what you're saying, is in good times you should be paying things down.
Yeah, we don't do that either, do we?
As I said, it's been a very long time since Congress has had expenditures and revenues aligned.
Right. All right. And we've got coming soon a $250 billion bill, it may be more, to subsidize big tech. Lord have mercy. Tell me what the community banks did wrong in 07 and 08. You guys punished them pretty hard. And I never have been able to figure out what they did wrong in the meltdown.
Thank you, Senator. I'm not aware of community banks doing something wrong in the financial crisis. There were community bank
Why
failures.
did y'all regulate them so much? Why did you put the hammer down on them? I mean, it was the larger financial institutions that caused the meltdown, and I might add, y'all didn't put anybody in jail among that group. But in doing so, you really heightened regulation on community banks. And I'm just asking what they did wrong. Was that just one of those Chicago drive-by shootings or what?
Thank you, Senator. I've been always a strong proponent of trying to protect community banks from excessive regulation and to work on the safety and soundness of the community banking system. I think it's one of the things that makes our financial system vibrant and diverse.
Thank you, Madam Chair.
Thank you, Senator Kennedy. I now recognize Senator Ossoff virtually from his office.
Thank you, Madam Chair, and congratulations to the nominees. Thank you for joining us. Mr. Barr, have you given any consideration to and what is your assessment of the distributional effects of monetary policy decisions?
Thank you, Senator Ossoff, for that question. I think that the Federal Reserve's tools with respect to monetary policy are pretty simple ones, and they operate in pretty simple ways broadly in the economy. So when the Federal Reserve is getting its job done right, the economy is working well for everyone. And that is especially true if you're a low and moderate income worker who might be late to the job market. If the Federal Reserve is able to, with price stability, maintain lower rates, then that is helpful to you. And conversely, if the Federal Reserve is not able to do that and unemployment is too high, or if inflation gets too high and inflation begins to erode wage gains as it's doing today, then that is also harmful to working Americans.
What's the impact on asset valuations of a dovish stance by the Fed?
Well, in general, when interest rates are quite low, asset prices tend to rise. And when asset prices tend to rise, those who have more assets have a greater ability to take advantage of that opportunity. And conversely, when interest rates tend to rise, asset prices tend to be more muted. But the overall point is that with respect to monetary policy, if the Federal Reserve is getting its job done right, the economy is working for everybody. And I think that's the main goal of monetary policy.
Why, since 2007, 2008, has the posture of not just just the Fed, but many central banks necessarily been low rates and a lot of extraordinary bond buying that were not previously normal policy tools. Why has that? Why have monetary policy makers, in your opinion, taken that posture or felt they need to take that posture in OECD economies, Western economies, since the recession of 07, 08?
Thank you, Senator, for that question. In general, when rates have been low and central banks have been pursuing asset purchases, it is generally speaking for two main reasons. One is to mitigate against financial stability risks facing the economy at that time. And the second is to effectuate an accommodative monetary policy.
Right. I guess my question is, why, in your opinion, has it been necessary in the judgment of central bankers for the last 15 or 20 years to maintain such an accommodative monetary policy? Or to put it another way, what has changed about the structure of the U.S. and the world economy such that in order to achieve its dual mandate, the Fed has deemed it necessary to sustain lower rates than the historical norm and more sustained bond buying than the historical norm, which, as we just discussed, has one of the impacts of that has been to pump up asset valuations, which has distributional effects that we've discussed. Why has that needed to be or been the posture for the last 15 years? What's changed?
Thank you, Senator Ossoff. In general, there have been a couple periods where interest rates were rising, but in general, when rates were low during those periods and when bond buying was important, it was because either of financial stability concerns facing the economies at those times, or because of the need for monetary policy accommodation given the weakness of the economies.
Yeah, Mr. Barr, and forgive me, I'm not in the room, so I don't mean to interrupt you in a rude way, but my question is, what has changed structurally about our economy such that in order to maintain financial stability and in order to sustain what central bankers deem to be adequate aggregate demand, it has been necessary for rates to be aberrantly low and for bond buying to be aberrantly high? Why has that been necessary in the last 15 or 20 years where it wasn't before? What change in the structure of our economy does that suggest or represent?
Thank you, Senator, and sorry for not understanding the nature of your question before, but there's significant debate in the academic literature about the answer to your question. Some of it has to do with changing demographics in advanced industrial economies. Some of it has to do likely with lower perceived overall lower extent of potential investment returns. Some of it has to do with a very high savings rate in most, but not all, of the advanced industrial economies. And people believe, academics believe, that those factors and others may have, for a long period of time, muted effectively what the neutral interest rate is. So that's a long answer.
Madam Chair, could I have the indulgence of one more minute?
Without objection.
Thank you. Please proceed, Mr. Barr, concluding the answer to that question, and then just, if you would, answer the following question. How would you or should you on the Open Market Committee consider the market effects, the impact on asset valuations of your decisions? And I think the answer can't be not at all, because it is at least a mechanism of action for monetary policy. But to what extent should the Fed consider whether, for example, violating forward guidance will have effects on volatility? Should that be part of your decision-making calculus? How will it be? So again, in sum, please finish the analysis, which I found very interesting, and I think the committee needs to hear, on why rates have had to be low and bond buying has needed to be so aggressive, and then talk to me about how you'll think about the markets when you make your decisions. That'll be my final question.
Thank you, Senator. Very briefly, I think, again, the tools of monetary policy are relatively simple, and they affect the economy primarily through the Federal Reserve's targeting of the federal funds rate, and secondarily through adjustments to the balance sheet of the Federal Reserve, and in a third way through expression of forward guidance. And the primary goal of all these efforts is to bring inflation down to the target level of 2%. Again, it's, I think, a pretty simple a goal. It's hard to achieve, but being clear about that objective, I think, is quite important.
Thank you, Senator Ossoff. I now recognize Senator Haggerty for 5 minutes.
Thank you, Madam Chair. Ranking Member Toomey, thank you. And to our nominees, welcome. I'd like to start with you, Mr. Lizárraga, about SEC rulemaking. Over the years, we've seen the Commission propose rules that interact with one another on outstanding proposals. For instance, the securities lending rule, the securities-based swap rule, and the short disclosure rule all impact similar markets, but they were proposed individually by the Commission. With such an interconnected financial system, it's important, I believe, to understand how these rules interact with one another. I just am first curious, do you believe, like I do, that it's important to consider how rules interact with one another when they're proposed by the Commission?
Thank you, Senator. That is a good question. And as a general principle, I do believe that it is important to assess whether there's any overlap among rulemaking without prejudging anything that's pending currently. But if confirmed, I do look forward to working with the Commission staff on assessing just the overall makeup of the current rulemaking.
Yeah, I would encourage the Commission, and if you're confirmed, your leadership on the Commission, to make certain that proper due diligence is undertaken, because markets are highly interactive and the rules do overlap as they touch various components of the market, but it needs to be taken with a more holistic view many times. And so I would encourage you and hope I could get your commitment to carry out proper due diligence on the intersection of rules when they occur to make certain that they achieve the proper goal when taken together.
Sir, I am happy to take a deeper dive into this question if confirmed.
Thank you. Thank you. I appreciate it. Mr. Barr, can I turn with you to talk about bank capital? Looking back in the spring of 2020, when the economy was truly in dire straits, our banking system weathered the storm, I think, remarkably well. The Federal Reserve characterized the banking sector at that point as, quote, a source of strength in an otherwise tumultuous period. Mr. Barr, my question to you, in your answer earlier to Senator Moran, you seem to agree that 2020 provided real-world evidence that capital levels in our banking system were sufficient. And my question now is, will you commit to relying on data and not ideology when assessing adding to regulatory requirements from capital to liquidity and beyond?
Thank you, Senator. Yes, I would commit to being evidence-driven, data-driven in my approach to capital and liquidity regulation and in regulation more broadly.
I think that's absolutely essential for certainty in our marketplace. Having been on the other side of this, having been regulated in the banking environment and beyond, that's terribly important for certainty. So I appreciate your answer to that question. Next, I'd like to turn to an area that has just frankly troubled me for some time. And it's an area that you had a great deal to do with in a prior role, and that's regarding the Cfpb. And as a key author of the legislation that created the Cfpb, you designed it in a way that made the Bureau, in my view, unaccountable to the American people because you placed it within the Fed and outside of the appropriations process. I serve on the Appropriations Committee. I appreciate very much how this structure has actually shielded the Cfpb from necessary oversight. And it's allowed the Cfpb, I think, to become a politically polarizing body, perhaps one of the most in federal government. So I'd like to hear your thoughts on why you believe that the Cfpb should be exempt from the appropriation process, or have a different thought at this point in time?
Thank you, Senator, very much for that question. I think there's always a balance in regulatory agencies between fostering accountability and fostering independence. And that's a judgment that Congress gets to make, and Congress chose in this particular case exactly how to structure the agency, the choices about placement, the choices about approach. Congress can make a different choice, but if you look at the Federal Reserve, if you look at the OCC, if you look at the FDIC, those institutions also are outside of the appropriations process, and that
Indeed, but they're very different type of institutions, and the approach and the result has been quite different. I'll follow up, given the lack of time, with further questions for the record on this, but I'd be very interested in your perspective and thoughts because I'm very unhappy with the way things are working right now. Thank you. Thank you, Madam Chair.
Thank you, Senator Haggerty. So the chair now recognizes herself for 5 minutes. And I'm going to be brief because I know it's been a long morning. Congratulations to all of you, and thank you so much for being here. Mr. Barr, I'm going to direct my questions to you. I want to follow up on the conversations that you and I had when we met around CRA. I think, as I indicated when we spoke, I was very happy to see the Fed and the FDIC and the OCC come together earlier this month, I think it was, to propose new rules for implementing the Community Reinvestment Act. I think this is long overdue, something that is very important to do. And I want to just follow up on this. I think the pandemic has really shown us how stark the need is and how the challenges of our economy have not fallen disproportionately on everybody in our economy. Because of the pandemic, that it is rural and majority minority communities that have had the greatest impact, which is what the CRA was designed to really address. So could you talk to us a little bit about, if you were confirmed, how you'll be joining the Fed midway through the rulemaking progress. I'd like to understand a little bit about what your focus would be and what your priorities would be with regard to CRA implementation.
Thank you very much, Senator. I appreciate the question. I think the Community Reinvestment Act has played an important role in helping banks and thrifts around the country over the years to serve all their communities. And I was very encouraged by the Community Reinvestment Act draft rule. If confirmed as vice chair and as a governor, I'd be working with my colleagues, both at the Fed and at the other agencies, to seek and to understand and to evaluate all the public comment that I hope the agencies get to understand the effects on the banking sector and the effects on communities and civil rights organizations. I think all of that public comment would be very helpful. And then again, if confirmed, my thought would be to work with the colleagues to get that rule in place expeditiously.
And do you think that the current economic conditions that we're seeing, the challenges that they present, do you think that elevates the urgency, the need to modernize our approach with implementing the CRA?
Thank you, Senator. Yes, I do think that when there's a greater economic uncertainty, when there's a greater difficulty for people navigating the financial system, it's important to have certainty in these areas.
Thank you very much. In the interest of time, I am going to cede back my time, and I recognize Senator Lumus for 5 minutes.
Thank you very much, Madam Chairman. And during the course of my 5 minutes, I'd like to invite members of the families of our nominees to take a breath, remove your masks for 5 minutes if you wish. I know it can be a long haul with those masks on. Mr. Uyeda, great to see you again. Thanks for being here. Congratulations on your nomination. The SEC recently released Accounting Bulletin 121. This is the SEC staff. And they stated that reporting companies and most importantly their custodians should hold digital assets as an on-balance sheet liability. I'm really concerned about that because I think that actually weakens investor protections because in the event of insolvency, customer assets are safer from creditors being held off balance sheet and further segregated from the company's assets. Do you have any thoughts on this?
So thank you for your question on this. So I am familiar with the Staff Accounting Bulletin, or SAB as they like to call it on the SEC staff, SAB 121, just at a very high level, and have not had time to become well-versed in the details or to have discussions with the SEC staff about it. I'll note it was a staff position. It was not approved by a vote of the members of the commission. There has been a tremendous amount of concern raised that I've seen in the past week alone about it. And so if confirmed, it is something that I would want to look much more into and have a discussion with the staff. One of the other concerns I think is we have a process for whenever there's a new rule of general applicability or you attach new conditions or requirements on existing rules to approve those through the notice and comment process under the Administrative Procedure Act. And when you have something that is effectively a rule that calls into question whether it should go through that process, and that also, I should say, raises questions about the ability of this committee to engage in oversight under the Congressional Review Act of any rule. So if confirmed, I would want to talk with the staff. I would also want to talk with the federal and state banking regulators as to how this interplays with their regulatory regimes. And then, lastly, I would just note that, the bulletin itself expressly states that it is just a position of the staff. It is not a rule of the commission, nor has it received the official approval of the SEC.
Thank you for your response. I would note that the Securities Industry and Financial Markets Association and Bank Policy Institute sent me a really detailed letter this morning, concerned about the lack of public comment around this big shift in policy and highlighting how this guidance could weaken important safeguards around custody of client assets. Madam Chairman, I ask for unanimous consent that it be entered into the record. And I urge everyone to take a look at it. Thank you for your response. Mr. Barr, switching to you, good to see you again, too. My question for you is, do the Basel III capital standards establish a separate prudential capital treatment relating to on-balance sheet custody accounts?
Senator, there are particular rules, yes, in the Basel framework. Capital treatment is different for customer accounts in general.
It's my understanding that with regard to the capital standards at Basel III regarding this subject, that they do not. But we can discuss that at another time. And that's because custody accounts are generally off balance sheet from an accounting perspective, correct?
Yes, that's correct.
Are you familiar with the Bank for International Settlements proposed prudential treatment of crypto asset exposures?
I have not read the BIS proposal in this area.
Okay, well, I'll let you know, to my knowledge, it's correct that this proposed capital framework explicitly declined to create prudential requirements for custody of digital assets. And we'd be happy to just send that to you. If U.S. bank regulators were to impose separate requirements around bank custody activities for digital assets, or if they were required to be accounted for as a liability on a bank's balance sheet, that would be different from international norms as I understand them. And so I worry that that might make them uncompetitive. Can you commit to discussing this further with me?
Yes, I'd be happy to discuss this further with you, Senator.
Thank you. Thank you, Madam Chairman. I urge all members to look at this important issue. So we might need to address this at some point. But to all of our nominees again, congratulations. Thank you.
Thank you, Senator Lummis. So thank you to our nominees for being here today and providing testimony. I do not believe we have any other senators who are present and wanting to ask questions. I hope that we can work together as a committee to move forward quickly on these nominations of today's nominees. For senators who wish to submit questions for the hearing record, these questions are due close of business on Monday, May 23rd at 5 p.m. To the nominees, we would like to have your responses on Tuesday, May 31st at 5 p.m. Thank you again for your testimonies today, and with that, this hearing is adjourned.